All right, you guys. Happy New Year. This video I'm doing New Year's Eve. I'm going to try to do several videos, time-life videos. So you can tell I have big plans tonight. But I guess we had a tough year, obviously. But I guess I have a couple of thoughts. One is that we're going to try to make money next year. And number two, it's time to start thinking about the broader perspectives of the U.S. financial markets. And specifically, I think it's time to start accumulating precious metals, to be specific. So I'm going to go through some of that with you. This may not be a short video, but I'm not going live. I've got to try to change my live structure. I get agitated and I can't tell if people are real or not, or if they might just be computers. But I'm going to try not to do lives for a while, other than going live when Ham wants to speak to you. But I don't see the benefit to you or me when people are offended that I'm ranting, or they tell me just to let Ham talk, or they suggest that I break for a while and not be negative and all of that. Look, I'm sure it's all well-meaning, or on the other hand, it might not be. I have no way of knowing. But I assume it's well-meaning. But until I can figure out a better live structure, I'm just going to stick to having my lives just begin at Ham and end at Ham. And I'm going to try to do some videos. Okay. Quickly, 2 stocks, 3 stocks, 4 stocks maybe. I don't have charts for all of them, but coming into the next year, which is next week, I'm going to be watching 4 stocks in particular. One, of course, is Finger. I think Finger Motion has a chance for earnings, for meaningful announcement or 2, and I think the selling will have stopped and some buying will come in. So I think Finger is a good time to buy next week to the following week. Let me make it clear, I'm not giving financial advice because I don't know your financial situation personally, and anything I say that's controversial or sounds like facts, it's all my opinion. I do my best. All right, so Finger, I think that would be I mean, all these stocks are speculative, but of all the stocks we have, I would think Finger is the most, there's no such thing as a sure thing. I'm struggling for a vocabulary word, but Finger is the safest in the context of speculation, if I can get away with it, putting it that way. It's around $4. You know, if you're willing to wait, I think it's a $40 stock easily just on its merits, or a lot more. But in return for that, you also get a chance of this experience of a squeeze. Okay, the second stock I want to bring up to you, and I didn't do a chart of it. Now I can't remember the symbol, darn it, of the one. You know, the one that was like YJ, yellow Ledbetter, JBYL or something. It went from 4 to 300. It's pulled back. I think that still has more room to go. That's what I heard this morning. But obviously, it's expensive to buy for hundreds of dollars. The reason I bring that one up, though, I think after that one has run, I heard that could go into $10,000 a share or more. I wouldn't play it. I mean, that sounds preposterous, but shoot. I have to let that ring through. Hopefully it rings through. There's a phone call. If I answer it, it'll end this video, and I don't really want to end the video. I want to get this done. I want to get something done before we go into the new year. But anyway, by bringing that stock up, I want to suggest to you GDC, God, David, Charlie, GDC. It's around $2.50 to $3. I have a feeling it'll be up on Tuesday morning, but I wouldn't be just surprised to see that run 10 or 15x at some point in January. You know, $25, $30, $40, $45, $50, maybe more. But that's just a trade. That's just a punt. Don't get all heavily invested in it. And then three more. CAUD, you know, they did a sting operation on CAUD. I'm not going to focus on the negatives anymore. But the gap is way up in this high teens, low 20s. What I think is going to happen, and I did a declining wedge here. I think CAUD, you have to give a mulligan to the new CEO. He didn't organize that financing, which was a sting operation. But it looks like the stock has broken out or is trying to break out of this descending wedge. And in my opinion, if it ever got going, it could go back to 1520. You know the risks. I went through them. I belabored them. But I think there's going to be 2 or 3 announcements coming. I don't know what they are. And you've got a full court press from the highly talented board. So CAUD is a stock to watch in the first quarter. I like HNRC for the first quarter. HNRC closed at around 2.5 cents. I can't believe these stocks are so cheap. But, you know, you see that yellow line there? That's $1.25. That's where I think it could go. There's a rally going outside. I wonder what it's about. You might be able to hear it. The key thing with HNRC is that you're going to get earnings soon. You're going to also, I believe, get an announcement on a cash distribution, but it could be stock. I think it's going to be 15 cents a share, but it could be less. Further, I think sometime in the next 90 days, maybe another 90 days, but basically in the first half, they're going to distribute the Pogo producing as it's in HNRA, the SPAC. And I think that's worth 30 cents a share to shareholders. The risks are that stock looks like they signed a toxic convertible note. I find no evidence of that. I can't find any evidence of that. But that's the way the stock trades. So that's one risk. He is going to try to get his shares of HNRC uplisted. Is that NASDAQ? Is that NYSE? When specifically asked, he said he would prefer not to do a reverse split. And to get this uplisting, it's going to involve acquisitions. So we'll see. But the key thing here, I think you're going to see an announcement of a dividend fairly soon. And then earnings, which will include a discussion of the company's situation, which on his call at Q&A, he thinks he's going to exit the year with $2.60 a share in net asset value. But we'll find out. It was 62 cents at the end of the third quarter. We'll find out. And then, like I say, I think there'll be a discussion of other corporate plans. So that's one. And my favorite, of course, I've told you, is Logic. Logic, this double bottom. Look, I don't know if that's a double bottom. I'm a terrible chartist, but that's how I'm reading it. It's a W formation. You come down here, the next bottom is a higher low. And then to me, this is a breakout. And they're in this 7 cents, which is the 50-day moving average. But look where the gap is. It's up here. You can't see right here, but it's 16 cents. 16 cents is the top of that gap. So that'd be a nice trade. You don't have to hold it forever, but it depends on which company either just acquires the shell or merges into the shell, and maybe we're in an ongoing company. If we're in an ongoing company, as opposed to just owning, it's a mild distinction, but if a company were to come and do a reverse merger and just take over, we'd probably have 1/8 of that company. But if it's just a merger of two companies, I bet we have 1/3 of that company. I don't know, a quarter, 1/3. We'll have more, is my point. And then it comes down, what's the valuation? What are the revenues? What are the projections? And of course, the implied reverse split's going to let a lot of criminal shorts and real shorts off the hook. It's just a fact. But it's going to give us a stock which is trading on maybe the New York Stock Exchange. That could be 60, 70, 80 cents a share. Anyway, Logic is the one to watch, I think, for the next week or two. All right, those are my stocks. I'm gonna read to you. It's 12 minutes in. I hope I can do this quickly. This guy, Tyler Durden, put out a year-end, that name, I always think of it being not like, being like Turd Ferguson or something. But anyway, he does great work, and I just want to read through it. I printed it out in color, and you can go find it. This was Saturday, December 30th at noon. And I'll start reading. Global bond. All right, let me read the headline. Fiat alternatives fly in 2023 as Powell pivot sparks $20 trillion surge in global stocks and bonds. Now, I'm not patting myself, but I told you I said it for the last few months, I felt we'd have a year-end up in the markets. 20 trillion. Okay, global bond and stock markets added almost 20 trillion in capitalization during 2023. And all of that gain came in the last 2 months of the year. After all of that gain came in the last 2 months of the year, after it had tested unchanged on October 28th. The gains were dominated by global stocks, which added 13 trillion, while global bonds rose by 6 trillion. I don't trust this Powell pivot, but here's the chart. And there's the gain. Look at that. sort of flat, and then we were low. People were calling for a crash. Whew. That, to me, is the consequence of injecting liquidity in the system. And I think that's what they're doing. Obviously, I think that's what they're doing possibly with the wars or the potential wars around the world. But also, they're just injecting money directly into the banks. I mean, through the mechanisms they have. NASDAQ soared to its best year since the peak of the dot-com bubble in 1999. And the rest of the U.S. major equity markets also rallied. But, is the Fed apolitical? U.S. Fed chair says premature to speculate on rate cuts. Fed policymakers discuss timeline to start rate cuts. We think not. They're not, in other words, they're not apolitical. Oh, I printed on both sides. I didn't know that, darn it. Okay, so bonds surge higher too. I didn't mean to print on both sides. That's tough. Bonds ended higher in price, lower in yield on the year. Gold up, dollar down, oil down, natural gas collapsed as the Fed shocked the world, suddenly flipping from uber hawk to full dove tard. Well, we'll see. We'll see. Okay. Let me see if I can find some paper to block. Yeah, I can do it that way. So, as they did with all that hard economic data unchanged in 2023, no real economic progress, as only soft data, hopes and dreams provided support for Goldilocks narratives. This top chart I'll show you in a second. Before we dig in the details, here's an odd one. Since the close of 2021, the S&P 500 is almost perfectly unchanged. Do you hear that? Since the close of 2021, the S&P 500 is almost perfectly unchanged. Oil and bonds are down 10%. Gold and the CPI are up 10%. I'm not going to show you those charts. They don't come out clearly. Anyway, I want to go through it as quickly as I can. Who says gold is not an inflation hedge? But 2023 was dominated by a few themes. The Magnificent Seven stocks. I used to call it the S&P 6, which I heard from somebody, but now it's the Magnificent Seven. Dominated the price action and outsized index gains in 2023. Investors preferred the safe haven, quote unquote, of these mega cap tech names over longer duration profitless tech until the Fed unleashed hell at the start of November and everything exploded higher, which left a record 72% of the stocks in the S&P 500 having underperformed the index this year. AI as a theme. The apparent benefits of AI know no bounds when it comes to investment, as Goldman's basket of AI stocks soared over 90% this year, while businesses at risk of AI impact rose 17%, helped by the everything rally in the last 2 months. Another theme, anti-obesity drugs. Losing weight, the easy way, appealed to investors in 2023 as the GLP-1 analogs sparked a surge in biotech, pharma, and hurt food and beer stocks. Banks. SVBs collapse in March, which, by the way, had an impact on GTII's Trento mining deals. That's what I heard, but we'll find out. SVB's collapse in March, not a permit, just a delay, sparked an exodus of deposits and increased the demand for Fed bailouts. Regional bank stocks ended the year down just 8%, having bounced back from being down around 40% in May, despite record usage of the Fed's bailout facility. Meme stocks. Now these, they say, are what we're involved in, I guess. Retail favorites had a wild year, but ended up 25%, retail being us, ended up 25% in 2023. The best year since 2020's chaos. Thanks again to the last 2 months of panic buying, dash for trash trading after the Fed folded. Cryptos. 2023 was a huge comeback year after 2022's existential threat moments from FTX and Terra USD and so on. Of the larger coins, Solana massively outperformed, up around 1,000% on the year, but Bitcoin and Ethereum, up 160% and up 100%, also had big years. Bonds. Bonds ended the year with the largest 2-month gain in history. There's a chart I'll show you. Look at that. I know it's hard to see because there it is. Largest 2-month gain in history. It's unbelievable. You're unbelievable. All right. And that rally pulled the entire curve lower in yields on the year, with the 5-year the biggest decliner, down 19 basis points on the year, after bloodbathing up around 100 bips at its highs in October. Bear in mind that the Fed funds rate added 100 basis points this year, and bond yields are all lower. I don't think it looks pretty. They'll try to keep this up until they get Uncle Joe reelected. Liquidity. Stocks did what they do. They follow the money. As macro data disappointed, stocks charged ahead on a re-emerging wave of global liquidity. There it is, liquidity. That's from the Feds, but that's also, unfortunately, war is liquidity. Rate cuts. It was a very volatile, flip-floppy year for the Fed and Fed watchers, as rate cut expectations swung wildly from 160 basis points to less than 60 basis points to more than 160 basis points to just 70 bips, and now back to the highs above 160 bips. More than 6 cuts, that would translate to, when the Fed dots are calling for 3 cuts. So is the market ahead of itself or not? I don't know. Additionally, the odds of a rate cut as soon as March are nearing 90%, up from less than 10% in September. The odds. You're not going to be able to see that chart. Additionally, I mean, those are the top chart's the rate cuts expectations. The bottom chart are the odds. I'll read it again. The odds of a rate cut as soon as March are now near 90%, up from 10% in September. Financial conditions. The rally in bond stocks and credit and the collapse in the dollar since the Fed signaled the end of hikes, and I guess it signaled that, if we can believe them, prompted the most aggressive easing of financial conditions ever. Financial conditions are now as easy as they were in May of 2022, when Fed funds were 300 basis points below current levels. Gold. A weaker dollar, signals of loosening from the Fed, and a world on fire means no one should be surprised by gold's great year, up almost 14%, best year since 2020, to an all-time record high. Here's gold. Is that a breakout? Is that a breakout? Okay, now under the hood of the markets this year, equities. Equities, 2023 ended on a down note with all the U.S. majors tumbling into the red for the week, erasing Santa Claus rally gains. But the afternoon saw dip buyers return, and they rescued the weekly win streak. Both most shorted stocks and the Mag 7, the 7 stocks, were also hit. Tech and consumer discretionary dominated the performance this year, with Staples and Oots. What's an Oot? The biggest losers. So Staples and Oots were the biggest losers. Energy was the other losing sector of the year. And that, to me, smells opportunity. NVIDIA, Meta Platforms, Royal Caribbean were the best performing S&P stocks in 2023, while FMC Corp, Enphase Energy, Dollar General were the biggest losers. I feel like I win when I lose, Waterloo. But overall, NASDAQ's dramatic outperformance this year lifted it to new record highs relative to small caps, and then fell back as small caps outperformed to the dot-com highs. So it went beyond dot-com highs by reading this, and now it just fell back to dot-com highs, which I remember. Many of you may not. Those of you who know a Taylor Swift song probably don't remember it, but I don't even know a Britney Spears song. Bonds, only the 2-year yield and earlier remain above 4%, but the curve is massively inverted from Fed funds. I'm not showing you these charts just because they don't show up very well. I'm going to get a computer where in the future I can just run through things with you. I don't know if it's the computer or the software. I'm trying to study it, but man, I can figure it out, and then you read user comments and you go, I don't want to touch this one. If S&P valuations are to be believed, and that's the rub, the market is expecting negative real yields again soon. Negative real yields. I personally don't see how. However, my concerns and worries, I believe, are going to be delayed until either Joe Biden or Hillary Clinton are president of the United States. FX. The dollar ended lower against its fiat peers in 2023. Its biggest drop since 2020, back to pre-COVID spike levels. It's in this document. I didn't choose to use that word. Swissy was the best performing currency of the majors against the dollar, while Japan's yen was the weakest. The Swiss franc soared to its best year in 2010 and its highest since 2011, in the middle of the EU crisis. The Japanese yen spent the first 10 months of 2023 plunging to its weakest against the dollar since 1990. Think of that, 1990. That's Saddam Hussein's war. That's George H.W. Bush. That's, what else happened in 1990? That's a long, I guess it's the Russia currency crisis, although I think that happened closer to the end of that decade. But that's pretty amazing. The Japanese yen spent the first 10 months of 2023 plunging to its weakest against the dollar since 1990. Then as the Fed's dovish pivot and Bank of Japan's hawkish jawboning picked up, the yen surged higher, finding support at October 2022 lows. Emerging market currencies plummeted to their weakest ever on an index level against the US dollar at the start of October, but in the last 2 months have seen the emerging market FX recover notably as the Fed pivoted. I mean, as far as I can tell, all the Fed did is jawbone. We'll find out if they pivot. Look, when they were raising rates, I think they were pushing liquidity into the S&P 6, into the banking, into the bond market. That continues now. Personally, I don't think it's new, but we'll find out. Ethereum did a good job last year, but only made it back to May 2022 highs. ETH underperformed Bitcoin all year until the last week or so, which saw ETH over Bitcoin ratio bounce significantly off its June 2022 support. Commodities. The broad commodity landscape saw prices plunge in 2023. To me, opportunity for the new year. Opportunity. With Bloomberg's commodity index down over 12%, its worst year since 2015. Ladies and gentlemen, there's a sale on in aisle 9. Two or three things about commodities. One, when there's war, there's a demand for raw materials. Two, when you start going into, I mean, it's tough. You got to balance. Oh, it's depression. There's no demand. But on the other hand, you have inflation. I don't think, even if we go into depression here, I don't think it's going to interrupt the development of Southeast Asia, many parts of Africa, the Middle East, and South America, perhaps. I mean, that's more tied to us. And then the third thing is, as people stop investing or finding or mining for resources, the supply goes down. So anyway, I think this is an opportunity. I'll read it again. Broad commodity landscape saw prices plunge in 2023, with Bloomberg's commodity index down 12%. Its worst year, it's that red line. Look at that. Look at that. Can't go much lower. It's almost at the bottom of the page. And that plunge in growthy commodities is a direct conflict with the large gains in growthy stocks. Gold outperformed the major commodities. It had its best year since 2020 after two unchanged There's a page. Oh, I see. They named page 25 twice. So, sorry. So, let me just read that again. Gold outperformed among the major commodities, the best year since 2020, after two unchanged years, while crude fell year over year for the first time since 2020. Natural gas was clubbed like a baby seal, poor baby seals, to start the year and never recovered for its worst year since 2001. Do you see my themes for the next year? Natural gas, oil, commodities, gold. He hasn't mentioned silver, but silver is going to be my number one. Other than these stocks, but I want to start you guys looking into dollar cost averaging into these kind of investments. Copper. On an energy equivalent basis, natural gas was systemically cheap to West Texas Intermediate crude all year after the huge sell-off in January. The big gains in gold over the last 2 months reversed the outperformance of oil in the prior quarter, bringing the oil in gold ratio, or the oil to gold ratio, basically how many ounces of gold are required to buy a barrel of oil, back down. And this is a key support in recent years. You can see the support here. So my opinion is oil is cheap. I guess you could read it that gold is expensive, but I don't think that's true. And finally, if history rhymes, the arc of history bends. Now, Martin Luther King said that, and I admire him, but so did Folks. Folks said that. If history rhymes, we can expect this buying panic gasm to continue into Q1 as it did in 2000. In other words, they're predicting, or he's suggesting, that you could see all of the trends that we saw over the last 2 months continue into the first quarter. And if you want to know what the catalyst could be in March, that gets us all the way to the second quarter. It will be the next big banking crisis. And that relates a lot to the stocks we're short, or we're not short. The shorts are short. Who likes shorts? It will be the next big banking crisis as the Fed is forced to shut down the BTFP. The BTFP. Since it is spewing free money via arbitrage. I'm having a hard time remembering what BTFP is, but I assume it's the Fed open window buying treasuries. But I don't know. I'm admitting to you, I don't know as I'm talking to you what BTFP is. That's my brain. Politically, next year is a big one, which makes it noteworthy that for the third year in a row, foreign-born workers dominated all job gains. Foreign-born workers dominated all job gains. I saw Elon Musk put out a tweet, or an X, that said that population growth in the United States, he called them illegal immigrants. It was Elon Musk's wording. I'm not saying anything. But for the first time, immigrants outpaced natural-born citizens, new babies in the United States. That was from Elon Musk yesterday. I don't know what it means. I'm not commenting. Politically, next year is a big one, which makes it noteworthy that for the third year in a row, foreign-born workers dominated in all job gains, while the native-born American labor force basically is unchanged since Biden's election. I'm just reading. The trend is not America's friend. China and Russia are dumping bonds, U.S. bonds, and buying gold bullion. As the market is starting to sniff it out, 2023 saw the biggest rise in the market's perception of USA's sovereign credit risk since the Lehman crisis of 2008. Cloward, Piven, and Chomsky would be proud. And on that note, Happy New Year. So here's the chart. I don't take credit for it, but the not Biden years that just preceded his election, that's sovereign credit risk. The Biden years, that's sovereign credit risk. I'm not trying to make any political points. I'm trying to set the stage for what I believe is going to be a year, if we're fortunate, the bank liquidity problems are going to make some of these situations we are in have their short squeezes. That's not a prediction. It is a prediction, I guess, but it's not a promise. I don't know what's going to happen. And that's one aspect. The other thing is I would like us to try to make money in some trades. I think next week it might be fun just to buy 100 shares of GDC, $250, and see if that goes up 10 times. Pay off your Christmas present spree. But I really think what we need to start focusing on as a group, or maybe new people that come here, I really think if we have time, what I've noticed since the lockdown, things are speeding up. So we might not have a lot of time. But I want to get you thinking about oil and gas and income in oil and gas, gold, silver, copper, and then things you know, like land and businesses that you know. But I think that the U.S. markets, they're going to continue this trend, and I believe it'll continue until the Democratic Convention, where they will put breakfast at Bernie's into the nomination. And then I think they're going to substitute the superdelegates are going to substitute Hillary Clinton for Joe Biden. That's how I see it. And then I think we'll have one of the most honest, transparent elections in the world. And the not Trump vote, in addition to the pro-Hillary vote, will overwhelm Trump, and we'll have Hillary Clinton elected. But once that happens, once that is over with in November, I think the markets could be in a lot of trouble. And that's why I think it's time to start adjusting our investing trends. So with that, I'm going to end this video right here. I'm going to do another video just now, and I might do a third. I just want to get these out today, and then I'm going to try to do some tomorrow, and then we'll hit the ground running on Tuesday. So if you've listened, Happy New Year. I wish you peace, love, happiness, prosperity, and I want you to become your own central bank, your own economic unit this year. It doesn't have to be all at once. We'll just do it bit by bit. As Ben Bradley used to say, today our best, tomorrow better. So cheers.